Okay, I'm looking at Tesla right now. It's up 0.25% at the moment. The EV maker is on deck to report earnings after the bell tomorrow. And as we look at the stock on this eve of the fourth quarter results, it's definitely down over the past couple of months, 6 months, but reports are swirling. Tesla's trying to add a little juice here. It is taking its Cybertruck on an international tour all over China. The EV maker is looking to showcase its newest model in 8 different cities there, including Shanghai and Beijing. Tesla trying to persuade Chinese buyers to look at the shiny object over here. This after Chinese EV maker BYD just launched a new lineup to rival Tesla. I think we showed you guys yesterday this thing, a Lamborghini-style luxury EV supercar. It's called the Yang Wang U9. Price tag $150,000. But who's going to win this battle, and how much does the man at the top play into this? Joining me now, one of the most loyal Tesla shareholders since day one, who, as we last spoke to you, Ross, you're kind of wavering here. Gerber Kawasaki, co-founder, president, and CEO Ross Gerber. What are you guessing for earnings tomorrow here?
I think they're going to probably do the number. I mean, there's certainly a lot of analysts who work on these numbers, and Tesla gives us how many cars they've sold in advance. So there's usually some wiggle room around, foreign exchange and credits and things, but we don't expect a huge beat by any means, and nor would there be any impetus to that. So what we're really hoping for is not a miss, and that's really my concern, because obviously they've been having to discount and throw lots of incentives to sell the cars that they're making. So that's what we're really hoping, is just that they beat the number and it's a solid quarter.
Well, you're talking about incentives. Let's just cut to the chase. That is price cuts. They're trying to juice the number, and they have done well. They had just reported record deliveries, Q4, record deliveries, incredible number here. But at what cost? That's what shareholders are probably asking you right now through the TV set.
Right. And this is what I'm trying to explain to people. See, Tesla is working on a dynamic pricing model where they don't make any effort to increase demand. And it looks like the way they're trying to increase demand is by doing some sort of world tour for the Cybertruck, even though they don't have Cybertrucks to sell people yet, and maybe not for a while. And so they're trying to goose other sales by using the Cybertruck, but they just need to advertise like every other car maker, on the football game, like the 49ers game had the highest ratings ever, and all the other car companies are advertising except Tesla. So people don't know anything about EVs, and we've seen a lot of FUD about the cold weather, and Tesla makes no effort to counter this. So this is what hurts them. When they make more cars, they have to lower prices to sell them, because essentially they're not creating any new demand. And most of the EV buyers who want an EV have bought an EV. So I don't see where Tesla goes from a sense of earnings. So they'll sell more cars, but I don't see how they make more money doing that with their current strategy.
The stock over the past 6 months has lost about 22%, but there's a different time point on the sort of rearview mirror, and that is that around November 15th of last year, the CEO, Elon Musk, began promoting or amplifying anti-Semitic posts that are on X, the platform he owns, formerly known as Twitter. Since then, the stock has dropped about 13%. And a lot of people say, what he speaks so loudly that they can't hear what he is saying. Well, what he's saying also speaks very loudly. What are you hearing from your clients who have accounts with Gerber Kawasaki, and also the clients who own Teslas?
Right. And I do have to stress, we have thousands of clients at Gerber Kawasaki on top of our fund GK, and which also has many clients. And so, most of our clients have Tesla. So it affects a lot of people. But when you put up that chart about Tesla's performance, what you didn't show is that the market has actually taken off since that date. So relative to other tech stocks, Tesla's vastly underperformed since Elon has taken such outspoken and, in my mind, controversial and negative views. And by doing that, many of my clients, and I tweeted this several months ago, were furious and sold their stock. And now it turns out that that was probably a good move because the stock is much lower from then. And as a firm, we've been forced to lower our allocation to Tesla because as we've seen the problems mount and the solutions that we see not being implemented, we've had to be prudent investors for our clients and understand that the story has changed. The Tesla story is not the same.
What do you make of his play for more control? He wants 25% control of the company. Right now, he has about 12%. He used to have much more, but he's sold a lot of his shares in order to pay for what was a very expensive price tag for Twitter. The board, we haven't heard from them. We're waiting to hear. A lot of people on this board, but it's rare that they've ever, if ever, swatted down Elon Musk. Charlie Gasparino makes this point all the time. The Tesla board does not rein him in. Granted, over the past several years, why should they? The stock has done incredibly well. But right now, the question is, should he be given such a huge chunk of power? And he says, if you don't give it to me, then I will develop my AI ideas somewhere else other than Tesla.
Yeah, so the board is his friends and family. So, I've never seen a board more conflicted than Tesla, and they just settled a lawsuit where they were so overcompensated, they're having to give back $750 million of overcompensation that they settled in this lawsuit. And Elon's pay package himself is worth $50 billion today, which you would think would incentivize any human on earth, right? So when you look at his pay package plus his stake, it's closer to 20% of the stock, and he fully controls the board. And what he's basically saying is, I want you to give me like 30 to 50 billion of compensation more for me to do my fiduciary responsibility to the company. So there's never been a more delusional CEO that I've ever invested with.
That's a big statement. Okay.
Yeah, I mean, it's crazy. Like 50 billion isn't enough to motivate somebody.
And Ross, let me just quickly get your thought on Netflix. It reports after the bell, it is your largest holding.
Well, no, it's not our largest. It's one of our largest.
One of your
holdings.
largest.
Yeah, NVIDIA is our largest holding. Thankfully, it's been great. So Netflix is doing big deals here, and we're very bullish on Netflix as now they're moving into like live sports and what I would call alternative live sports, because they're not bidding for the very expensive football packages like Amazon. And now they've made a big move on WWF, which quite frankly isn't my type of content, but a lot of people watch it, and it brings those subscribers more value and less reason to cancel on a week-to-week basis. And so we love the move from Netflix and the continued diversification of their content offerings and gaming. So Netflix is an important company to watch.
I agree. Ross Gerber, great to see you. Thank you very much.